Welcome back to Mining Stock Daily. Ian Wagner here with a corporate update from our friends at Talisker Resources. Talisker is an emerging gold producer and developer in the Bralorne district of British Columbia. They trade on the TSX under the symbol TSK and on the OTCQB under the symbol TSKFF. Since we last spoke in May, a lot has happened. A 43101 technical report filed on the new resource, a land package expansion, a non-dilutive equipment financing facility, and some pretty eye-catching underground face samples at Mustang. And with us today to talk about all that is the CEO of Talisker, Mr. Terry Harbert. Terry, good to see you. Welcome back to the podcast.
Hi, and thanks very much for having us back on. A lot to talk about since the last time we met.
Yeah, I know. I can't believe it's probably the end of May, so it's probably almost 2 months. So let's kind of set the landscape a little bit. So, as I mentioned, you guys filed the technical report on 3.36 million ounce resource. You added the Ben Nevis ground to expand the district to 24,000 hectares and 40 kilometers of strike. And you guys secured an $11 million equipment financing facility. How are you kind of thinking about the pace of news flow right now, and kind of what's the through line connecting all of it?
Oh, look, we're just really executing on our aims that we have for this year. With the resource, we expected to have that out in May, so we executed that on time. Was a little bit more than we expected, about 700,000 ounces more, so that's always positive.
Very positive.
We've effectively doubled that resource and increased the grade, so very happy for that outcome. I think a few times we've spoken about the ore sorter. And really, this equipment financing was to finalise that implementation. Anyone who's had the time to read the press release, you would have seen that we've already paid for some of the equipment. So this $11 million was basically to reimburse some of that and continue the rest of the payments. And in the underground development. It's a little bit of, this is what we were hoping to expect, and this is what we're seeing. We've always talked about the incredible continuity of the structures at Bralorne. Talked about the high grade with the 1045 level that last press release was about. It's new development, so we've ramped down there from the previous bottom, which was 1060. And we've developed on all three of the structures. And at first, we've got results back from the BK and the BK 9870 veins. Still waiting for some of the Alhambra, but really incredible results. I've been in the game a long time, and even these are some of the best that I've seen. So pretty happy to see them.
Yeah, absolutely. Let's just jump right into that kind of topic. July 21st news release, so just two days ago, phase sampling at that 1045 level at Mustang defined a 127-meter strike length averaging 21.52 grams per ton gold, including a 610 gram per ton gold over 0.58 meters. Obviously a striking number. The phase samples like that, their geological validation, how does this compare to what you're kind of seeing come out in terms of the mined grade on that level, or kind of even on that 1060 level, as you mentioned? Kind of talk us through kind of what you can take out of that and what that means.
Yeah, look, so it's development sampling, so
Right.
Very different to drill hole sampling. They're on each of the faces as we develop in our lateral development. We do a channel sample every 2.4 meters, so it's very high density sampling. So our expectation when we come to mine this, it's going to be pretty close to what we're looking, what we're expecting to come out. We haven't yet mined the stopes between the 1045 and the 1060. So this is development ore that's coming out. But looking at it, it's a very good indication that we're going to have some pretty high grade material here. and it's very consistent. This news release follows on from a previous one, which was on the BK vein. That was a 60-meter strike length, averaging 27 grams per ton. So, quite an extensive volume that will get taken out. And then these new results come out significantly longer, nearly double that strike length, nearly 130 meters, and averaging 21 and a half grams per ton. So, really superb results. And we're pretty excited to get out and stope this material out. And of course, to follow these ore shoots down to the next level, which is the 1030, 15 meters below this, that we've already developed down to, and we're on with the lateral development, and continuing to develop below that to the 1015. So we're ramping down to that, and then once we get there, we'll develop again down to the 1090. So really excited to follow these ore shoots vertically down at depth.
Yeah, yeah, and so I guess made a good point. Obviously, this is just development ore. So when you did those face sampling at 1060, and then you followed up by mining, were the grades that you mined fairly consistent with the face samples from that or previous levels?
Yes. Yes, they were very well. Interestingly, it actually extended beyond where we'd had our block model. So our block model was based on drilling, and often because of the spacing of your drill holes, you might miss some of these high grade pockets. So when we were developing on the 1060, we actually continued to develop outside of the block model, because each face we were hitting on these veins came back with a lot of abundant visible gold. So we just continued it on. So it's really great to see this down extending into these lower levels.
Nice. Well, kind of switching gears a little bit to kind of your throughput ramp. I know when we spoke earlier this year, and even in May, I think said you were averaging around that 200 tons per day trucked, with a step up toward 300 and then 350 once the ore sorter comes on. And I believe you said a mining rate permit amendment was in the works. That could take you then to 750 tons by the end of the year, or maybe next year. But kind of since we spoke, has that permit amendment been filed, received? What's the current rate? Like, just give us kind of a paint the picture there.
Yeah, so we have filed that amendment. It was in around about a month ago, I think that went in. So the government's in the review process of that. Really, we don't see any challenges there. We've socialised that very well, and have all the data, the ground control management plan, and the MLARD, or the metal leaching acid rock drainage. So all the test work that you need to do to be able to submit your permit, it's all been done quite well. It's really just a rate change and some new areas that'll be brought in. So we don't really see any challenges. If all goes well, we might have that towards the end of this year, but we'll certainly have it in first quarter of next year. That'll allow us to continue that ramp up. Our ore sorter here, we've started the earthworks. A lot of the equipment has. All of the equipment's been ordered. It's either arrived or it's on its way to the site. We expect we're going to phase that system in. The crushing plant will go in first. We expect it to be operational around September, October, when the ore sorter, the equipment itself arrives. Then we'll be implementing or installing the ore sorter, and then we'll have a test period where we define the thresholds. So we've got a pretty good idea of what the sensitivity thresholds would be. We did a significant amount of testing both in Germany with TOMRA and also at the University of Saskatchewan, where TOMRA have a facility with the university. So we'll be starting to run that on our material and define what those thresholds are. So it's like in a pilot or a test phase for several months. And then the expectation is that once we have that finalised and really dialed in for our ore, we'll transition across end of the year or early next year into full-scale run-of-mine usage of the ore sorter.
Okay. And then just to zoom out a little bit on that, like the benefits of that and what it gives you is less waste ore shipped, so less more payable material, and then also reduces your costs overall, right? Just kind of maybe unpack that a little bit.
Yeah, so really, with the veins that we have, we need to mine wider than the veins to be able to get the equipment and extract it out. So it's waste rock comes in there, or the wall rock that comes in with it, and that has a direct a dilution
Hmm.
factor. So it blends with the high grade ore. So it reduces the grade and increases the volume or the tonnage that we have to move. So the real benefit of the ore sorter is to be able to selectively remove that waste material that either has no gold in it, or it has a small amount of low grade gold that's sub-economic. So our recoveries won't be 100%. We don't expect to recover all the gold. We actually want to lose some of that lower grade, or that sub-economic ore that's in the waste material.
Hmm.
Waste material, we expect to remove between 30 and 50% of that waste material. So that'll have a direct impact on our transport costs by 30 to 50%. It's a 1:1 correlation. And we're expecting here to see the grade increase. The last testing we did, the grade increase was very high. We're sort of expecting between 80 and 100% increase in the grade, which increases our payable as well. So that has a double impact on
Double whammy.
reducing costs and increasing payable. So yeah, it's great technology.
Yeah, exactly, and that's super important with you when you guys have that DSO model, right, where you're taking that ore and shipping that out. Um, Okay, so yeah, let just talk a little bit about kind of the financing of the equipment, and you mentioned you part of that was already paid for, and I guess just to read off it, you engaged with a financing facility with Two Shores Capital, that is all to well, how do I want to ask this? I guess, yeah, just talk about that deal and kind of why you guys did that. I know, it's coming on the back of a financing is maybe just some clarity around why you decided to do this as well, in addition to the credit facility I think you have with Ocean Partners for around 25 million. If I'm understanding, just kind of how the capital is organized and structured.
Yeah, so look, it's really just using tailored instruments, or different instruments. So the 11 million here for the ore sorter is basically for capital expenditures. So this is this is equipment, buildings, conveyors, crushers. So it's all the actual physical assets, physical equipment that this is being used for. When we tap into the ore sorting, that's more for capital development. So we'll be using that to do our lateral development, our waste development, so we can accelerate our production timeline. So it's sort of two different structures or two different instruments. One's sort of backed by the equipment. That's the one that we've done with Two Shores, and the other's more tailored towards usage for development or project acceleration.
Okay. Okay. And then kind of switching gears to maybe something I was a little surprised to see, you guys announced a land package acquisition, the Ben Nevis acquisition just about 10 days ago. Again, expands the project to 24,000 hectares, 40 kilometers of strike. To put that in context, you guys have 105,000 meters committed to drill this year across Mustang, Bralorne West, Olympus, Congress. Where does this fit in? Is this sort of longer dated optionality? Is this sort of near term work? Like, how should we think about what this gives you?
Oh, and it really dovetails in with our district scale strategy. So we've been saying for some time that we're controlling the district. We want to develop multiple mines, bring them in, and really we want to be the dominant player in that region. So we're always looking for land acquisitions that can have a bolt-on impact, that have good prospectivity, mineral occurrences, and a good spatial association to the Cadwallader Break, which is the main continental suture zone between the two paleocontinents. That is the major gold conduit or fluid flow up through the crust to the surface. So this land package is really following this Cadwalla break down to the south. Adding another 7 or 8 kilometres along the strike length, adding several high grade middle occurrences that also came with it. A lot of early stage, so we've still got work to do, but it's about building out and consolidating, controlling that entire belt, so we can build economies of scale as we bring new mines online. So really, we've got we won't be doing any work on that this year. We'll probably start doing some preliminary work next year and onwards. But really, we picked up the ground so we can make discoveries that can fit into our production and our hub and spoke model.
Other than kind of knowing where it's at and where it sort of fits in from a geographical sense, where how close it is to your current land package and the, as you mentioned, the fluid conduit, what else do you know about it, or is it still just so early stage that it's all prospective essentially?
Oh, so we've reviewed all the historic or previous work on it, all the assessment reporting. So we know very well that there are the similar or Bralorne style vein systems there. We know the host rock geology that's similar to what Bralorne is hosted in. So it has all the right indications of being able to host some style of mineral deposits. Very limited drilling, mainly only early work being done down there. But really, it's following that trend, following that Bralorne trend that's also important.
Nice. Well, let's switch a little bit to you. You guys have a PEA slated for this fall. I think built on a lot of data cuts off last year to December 21st. Any kind of update on timing and kind of confidence in that window still? And then I guess just also, can you give us a sense of kind of what processing scenarios being modeled? Is that DSO or your mill or kind of hybrid factor with the ore sort of factored in? Just maybe walk us through what people should expect when that comes out.
Yes, of course. So to address the timeline first, we're still solid on the planned timeline here, September, October. So the team is on track with that. And the scenario we'll be looking at is a hybrid scenario. So continuing on the DSO until 2029, and then implementing our own mill and transitioning across. And also implementation of the ore sorter throughout there in the current timeline we're looking at. So end of this year, early next year. Main focus of the ore sorter will be upgrading. So we've stockpiled a significant amount of inventory that's lower grade material, so below our cutoff to truck. So we'd like to process that and then be able to sell that ore as a higher grade product. So that'll be included in there as well.
Okay. Okay. Um, Gold's still trading above 4,000 barely on the day. Two-part question. I mean, one, you guys are going to have two Q2 earnings coming landing next month. I'm just curious how the margin picture is looking today and kind of any color you can preview there. And then secondly, a lot of your news flow has all been extremely positive, but the stock has fallen off a fair bit over the last, I don't know, 6 to 8 weeks. Just wondering if you have any thoughts there, or just kind of what you're hearing either from investors or analysts, or a sense of why that might be.
Oh, look, I think the whole market's sort of following the same trend. If you were to plot us up with all of our peers and the relative gold price, that'd almost be parallel charts here for the last 3 or 4 months. It seems like a lot of investors are really taking a conservative approach with the volatility in the gold price. We see the gold price is certainly in a trading range of about 4,000 to about 4,200, but it's fairly flat. So we can see it with our stock prices. When the gold price goes down, people pull out and go back to cash, and then the gold price goes back up. We tend to trend back up as well.
Mm-hmm.
So I think at least until we have some significant changes in the geopolitical situation in around the world, I think we're probably stuck in that band for now. For us, we've just got to keep going. 4,000 is still a pretty good gold price to have.
Yes.
It's certainly much better than 2,000 or 2,600. I think that's a very positive thing. People just got used to 5,500 gold.
Right.
So that's why I think we're seeing it with the equities, and many of the equities, not just us juniors, but also the large ones. We've seen them come off between 50 and 100%, and even more than that in the last time. So the expectation is all that'll correct itself. We're sort of ignoring the market at the moment. We're continuing with our exploration, with our operational plan. We know what we're building here, we know what we have, and we know what the future valuation should be, and that's what we're working towards.
Great. Yeah, you're right. I mean, it's sentiment is low because people like that 5,000 number. I mean, and why how could you not, right? But if you had said 4,000 2 years ago, I think everybody would be pretty thrilled. But just to ask it again a little bit, just kind of with those earnings coming up, kind of what can you kind of provide around either the margins or kind of what or just numbers of what you're expecting for ounces sold, things like that at all? I don't want to, do any forward-looking statements or anything like that, but just any kind of color you might be able to add there.
Oh, sure thing. And look, our quarterly results will be out here within about 2 weeks. So we'll be able to discuss that in greater detail. But really, there's no expected surprises here. We're just sort of tracking forward on our plan of production. Some of the mining rate has been slower than forecast, but the total ounces produced has been higher because we've been able to extract higher grade coming out. So really, no surprises, and we're incrementally increasing our production rates. So things are pretty well going to plan.
Great. Well, yeah, we'll look to catch up with you then once those results come out and talk about sort of the ramp up of the production rate, and then maybe dive in a little bit more into Bralorne West. I know you guys have been doing a lot of development there and drilling, obviously. So, but I think it's a good place to leave it today, Terry. It's I appreciate you coming by and giving us some color around the recent developments there at Talisker.
No worries. Thanks very much. And when we get these quarterlies out, we'll also be having a fairly beefy operational exploration update. So we'll just basically talk about all the good work that the team's done, where they're at with health and safety. We're up to nearly 570 LTI-free days, which is quite exceptional for a new mine starting up.
Yeah.
Completing development there to Bralorne West. I think by then we'll almost be at the 10, 15 level, so 2 full levels below where these current results are from, and certainly a lot of ore sorting equipment, facilities, development moving forward. So a real lot to talk about in that next release.
Yeah, absolutely. We'll look forward to it. That is Mr. Terry Harbert, CEO of Talisker Resources. They trade on the TSX under the symbol TSK and on the OTCQB under the symbol TSKFF. Thanks a lot, Terry. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.